Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, March 3rd, 2009. Well, today we're seeing some activity on Wall Street, folks, a slight bit to the downside. There's a little more volatility than yesterday's market. Yesterday's market was a very quiet market with a constant sell pretty much all day, except for this little blip in the late afternoon trading session before we closed at the lows. Now, the trendline analysis techniques we use are giving us our perfect levels again, and I'm going to go over how I came to these levels on the charts based on what points I'm using. Again, you're always looking for pivot points, lows, highs of charts, and just connect them through, and you're going to get major levels in this market that the market will be bouncing off of. I use trend lines, I use moving averages less and less, and more so trendline analysis. It's really the hidden gem, if you will, in the overall market. Not a lot of traders know how to do it. We teach it. We're going to continue to go over it in these free videos, as well as even more so in the nightly videos in the premium service to our subscribers named the Research Center. Okay, now let's go over what this market is doing, because first of all, we started higher. Market gapped slightly, but it did not hold. You had the Dow up about 100 points, the NASDAQ up about 20 or so at the highs, and the S&P was up about, 10, 12, 13 points or so. But the key here is this, folks. Almost immediately you saw some downside come in. Notice when we gapped up, we actually came to this trend line right here. Now again, you take that high pivot, which is actually a fake print, but oftentimes it can be used, and you connect those through and you get the high pivot for today before a little bit of a sell-off. Now, the key here is this, folks. When you start at this sell, the first place you're looking for is obviously the moving average, the 20 moving average here in yellow that stretches all the way back. That's your first support. And the first time you sell, you hit that, bounce off, consolidate, and then ultimately break down. However, the second point you get to happens to be yesterday's pivot point on the chart before the move up. And you can see it right here. It's the low of the day before we pivot up, before we sell off, all right? Using that point, you draw a line straight across. And again, you can always draw these straight lines right across. Doesn't matter which point. In fact, I would even have one on my chart from this point over here. All right, and you can see on this candle right here, you actually pierce it. That's gap fill, and very important. You pierce it and then bounce off of it, and then the next candle just wipes it out. But ultimately, you recaptured it and then rebroke it again, so this line becomes less and less important the more it's broken. The ones you want to focus on are obviously the ones that the market hits and doesn't push through. Those will be the strongest points. In any case, what you did see is continued selling, basically, to the point where we took out yesterday's low, made new lows on all the indexes lower than November, except for the NASDAQ, and then finally came into this trendline support line. Now, this trendline support line, you have this line and this one connected to the lows yesterday all the way down to the low of the day here, and they both coincide at the lows. Now, that's telling you one thing, folks. That's telling you there's a lot of support in this market, an extremely good amount of support at this point. Now, notice how these two lines start to diverge as we go lower. That means it's going to be less and less of a support line as they get further and further away from each other. It just so happened that they both cross right over here where you first hit it, and then again, as you hammer on it, they're so close, you can see it working together to hold this market up. So that's a definite key you want to pay attention to, folks. Those two lines, when two lines come together, always analyze that. Always understand that that's going to be double support, not just single. Now, as this goes away, as you can see, the market's ticking down a little bit. Should we come down, this will be support again, but it's not going to be nearly as heavy as this support line was here at first because of the cross. If you happen to break this one, then you look for the lower one, which will obviously extend as time goes by and we get lower in this market. Now, the big question is this. In a technical sense, you had a nice move up here. This is when Bernanke finished speaking, and Bernanke and Geithner both talked today, folks. And this is important because the market generally does not like when either of these two individuals talks. All right. First of all, Bernanke last week, when he talked, actually, you did get a rally, or it might have been late the week prior. Either way, for the first time in I don't even know how long, you actually got to move up on Bernanke. Now, today we saw selling on Bernanke again. And this is where Bernanke started to talk, right about 10:15, 10:30, right in this time frame, and look at the market. Down, 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 hits support, hits double support, and then all of a sudden Bernanke ends right at 12, and the market starts moving up. So these guys are done talking, the market starts to rally, rally, rally. It goes right to the 20 moving average, and look at this triple cross in trendline analysis lines. See this one here, then you have the secondary one, and this one right here. That's telling you there's an insane amount of resistance there. Notice also how you actually pierce the 20. All right, this is why trendline analysis is better than any other technical analysis tools like the MACD, RSI, anything out there. Why? Because everyone out there, all the normal technical traders, they use that stuff. You want to find technical tools that are not used. Those are the ones that will work. Once something gets used, like for instance, if everyone learns trendline analysis, it will no longer work. That's the key, folks. The fact of the matter is, almost no one wants to learn it because it takes a little bit of study, and people generally are too lazy to do that. I'm just being honest here. That's the way it is. Ultimately, if that's what it is and doesn't make sense to make any money that way, then fine, so be it. I like to teach it to our subscribers, our premium subscribers. We talk about it in the chat room all day using the video and drawing trend lines on charts, and ultimately it will be your key. And this is exactly why you see a Pierce. All the average investors will short at the 20 and be out of the money on this tip higher. Only the pro traders, the elite traders that know trendline analysis, will wait for a little bit of a Pierce there right into this triple necktie and go short there. Alright, and then you get a nice sell-off in the next candle. You can either cover that short there or wait till this falls all the way back down. Now, ultimately, you're going to have a bunch of lines here. Now, the resistance points are as follows. You have low of the day support. I'm going to draw this line in. This will be a decent support line. Your low of the day right here. It'll continue across. You just take your line from the low of the day and stretch it all the way across, and that'll be support. Then you have this line slope down and this one down there. Those are your main support lines in this market on the downside. On the upside, you have this one. Although this one's straight across, notice how it got broken already, broken to the upside, broken to the downside. You can almost negate that one because once it gets broken both ways intraday, it's such a minor resistance, I'm even going to remove it. You know, that one I'll even stop paying attention to. What I will pay attention to is these lines. Alright, these triple lines, the 3 lines, 1, 2, 3. Those lines I will pay attention to. I'll keep watching the 20 moving average, obviously, to watch to see where that one goes. And I'll also take the pivot high as well, which basically mirrors this point right here, and stretch that across. And you can see it basically mirrors the same line that's currently in the chart. And that will be a good resistance. Notice how the 50 moving average is sloping down, and that'll be a key level as well. So it's all about understanding the charts. Read the charts, study the charts. The charts start telling you where the market's going to go. Okay? I had these lines here. You know, to have these lines in here is a very key thing because it tells you that there's a high probability of a bounce. Now, nothing's 100%, but trendline analysis will put the odds in your favor more than anything else, in my opinion, more than MACD, RSI, stochastics, you name it, all those, computerized things now. And that's the key, guys. Trendline analysis is really using your eye to focus in on trend lines. Which ones are the most important? Yes, it takes a little time, but once you get that down, it's a miracle to have. And generally, computers aren't going to do as well as your trained eye once you train it because they don't know which ones are the important ones and which ones aren't. All right, you have to isolate them and find that out. In any case, folks, notice the market getting a little bid. This is real time. Just to go over what the markets are doing right now, we have the Dow down just 12 points. Nasdaq's actually turned positive here, up 2 points, and the S&P is down 3. If I had to guess, folks, I think that once Geithner's off today, it could be an interesting situation. You have a couple things working for you. Number one, on the positive side, Geithner's done. The market breathes a sigh of relief. That's one possibility. That's the upside possibility. However, looking at my trend lines, you can see if the market has to clear these levels. Now, one thing I will say, and this is going to be a key, if the market can clear this 50 moving average, see this line, how it's sloping down into all these, meaning it has to clear all this, and get above here, then the market should run to the highs of the day. All right. After that, it could obviously make an even bigger move, possibly up to the gap window from yesterday, right in this range. All right. On the downside, now the market has a tendency to sell off, and this is something very important. Keep in mind, look at yesterday. You rally up early afternoon, sell off, close at the low. The day prior, sold off, bounced at 330, sold at 350, closed at the low of the day. What you're looking for here, if that's going to happen, then how is it going to happen? Well, you're going to have to watch these supports. Watch your double bottom support, and then keep these two trend lines in, and ultimately, if you sell off, you'll pierce that level and get to that support line. Probably each support is good for a scalp bounce. On the downside, I'd be very, very cautious being long or short this market for an extended amount of time. Scalping in this market is great. Other than that, you have to be so careful. It's just way too volatile in this market. Absolutely volatile. All right. Now, Apple Computer showing strength today. We'll cover that in the Research Center tonight as well. Research in Motion also very strong. Seems like the phones, the gadget companies doing well today. Technology overall, as you can see, NASDAQ positive while the rest of the market is generally negative. Financials still under pressure today, and we'll continue to watch those as well. All right, folks. Hope to have you join the Research Center or the Swing Trade Alerts or the chat room with video now. And also the webinar on March 21st. You can find that on our website under Education, Seminars, and Webinars link. Take care. Have a wonderful day.